Greetings, members one and all of the Salivation Nation. Gold bars are making an 11,000-mile journey through the air onwards to New York City to ease supply squeeze. Let's explore. That's the headline from Bloomberg. This article sent to me by Alex Miles. Very interesting indeed, as we are seeing the Australian Perth Mint now starting to ramp up production of kilo-sized bars because there is this increased demand for gold and silver coins amidst the coronavirus worries out there. But of course, it's not only problems with mining, with mints being shuttered, but also transportation opportunities aren't as prominent these days, as this article outlines here. Australia's largest gold refinery has ramped up production of 1 kilogram bars to ease the supply squeeze in the United States that helped propel a surge in the premium for New York futures. And that's just it. We're seeing not only a separation between the paper price, the Comex prices of gold and silver, but also that's the separation of those prices from the futures prices, and then a further separation from the physical prices as well. So it's like there's 3 different prices that are even more separated than ever before than the normal separations that we're kind of used to. The collapse in air travel that's grounded passenger jets frequently used to transport gold products and virus-related disruptions to some refining capacity has tightened availability of the rectangular bars typically used to settle the Comex future contracts. And, you've heard other channels talk about, I think Junius Maltby has outlined some of this about how, the Comex is being tested by the physical. They're going to have to come to grips or come to be able to prove that they have the gold to back it up. And so that's where this is all coming from, and how they're realizing that they've got to get these bars into the city, into New York, so that they can be able to satisfy and settle those contracts. We're producing as many kilo bars as we can. We're probably churning out 7.5 tons of them a week at the moment, and we are forward sold well into May, Richard Hayes, Chief Executive Officer of the Perth Mint, said in an interview. A very large portion of those kilo bars are ending up as Comex deliveries. In a chaotic couple of days in late March, the premium for New York futures over the London spot price rose above $70, which is the highest in 4 decades. That's absolutely stunning to hear. The spread is narrowed to about $21, yet that still compares with just a few dollars in normal times. And to keep in mind, too, is most of the premiums we're paying on an ounce of gold is upwards between $150 to $200 nowadays still. The Mint, which reopened a kilo bar production line in response to the supply crunch, expects elevated demand to prove to be only a short-term issue. Arbitrage issues around the Comex will be short-lived, and I don't see them lasting for months and months, Hayes said. This is an unusual situation where you've got plenty of physical metal, it's just in the wrong form and in the wrong place. That is key, folks, and that's something I've been trying to say for a while. It's not that there's not enough metal, especially silver. And I think that's one thing we have to realize, is that for you silver stackers out there, and I'm bullish on silver, and I do think it's going to go up somewhat in price, but there is no shortage of the actual physical metal. What's being short is the product and the means to get it there, and like this says, it's in the wrong form and in the wrong place. In other words, you may have the metal, but it's not in a planchets, or coins and that kind of thing. It's a bottleneck, really what it boils down to. While London's gold market trades large 400-ounce bars, Historically, New York contracts have been settled with 100-ounce bars and kilo bars. And that's interesting news. I didn't realize that. So London's gold market trades large 400-ounce bars, and we've actually seen some of those. You may have seen the periodic videos that shows the London gold storage facility. But New York contracts, they have 100-ounce bars and kilo bars. Boy, it'd be nice to have a kilo bar. That's 32.15 ounces of gold. Certainly would be something to see. So if you want to see demand surge, let's take a look at this chart here from the Perth Mint. Gold coin minted bar sales in March jumped to highest level since 2013. This is quite interesting indeed here. So we see 2013, look at that, 0.12 million here. And look at that, it has surged up quite a lot. And look at there, 2013, this is about the time, by the way, when the prices were just coming off their highs, and most people thought we were seeing a massive dip and it was going to just rebound very quickly, including myself. Boy, was I wrong, and was everybody else wrong. And so that's why you see that big jump in demand there. But it's happening again. But this is a different situation here in 2020 with this demand. But look at that. This whole chart is strange. How widely different each month is. And I guess it sort of does come in some cycles, I guess you would say. And that could be what's normal about it. It does seem to be like around December, it looks like they pick up each year. That is kind of consistent, except for here in December 2017. But most of these towards the later part of the years, they tend to pick up. But this is definitely an interesting chart for sure. A separate outcome of the coronavirus pandemic has been an acceleration of the refineries' work to source additional raw material from beyond traditional suppliers in Australia and neighboring nations, including Papua New Guinea. Interesting. All right. The Perth Mint has struck new contracts with some North American gold producers and operations in West Africa in the past 12 months to process their mined material, known as doré. We talked about that in a prior video where some of it was stolen by perhaps a Mexican drug cartel, and they flew off into the distance and got away with stealing a bunch of doré bars. Since supply chains have been disrupted by the virus, more global mining companies have been seeking pacts with the refiner, according to Hayes. We've certainly won some additional volumes out of Africa, and we've got another 3 or 4 contracts that are in the final stages of negotiations now, he said. The facility is also continuing to see strong retail demand for precious metal products in the U.S. and Europe, prompted by investor concern over the potential economic impact of the current crisis. That's just it. There's a lot of unknowns. We don't know what's going to happen once we see the economy start to turn back into operation. The gears, the free enterprise system start to turn again. It's going to be a slow process. We're seeing here and really around the world, it seems like we're either at the peak or leveling off from the peak and starting to make our way slide downwards. But there's so much about this that we don't know exactly if it will restart or reappear and have new outbreaks and a new surge. I believe it probably will, but my guess is the whole world is probably more prepared for the next time, so that when we do open up, we can mitigate some of the spread and squash some of these outbreaks. Notwithstanding, no matter what, we are going to see some economic reprisal from this, for sure. And so where will that lead, and how will that manifest itself economically in terms of this recession that we all know is here? We're in the midst of it, even though it's not been made official yet, but we know it's here. Or if it will lead to a greater recession than what we saw because of the situation, or what some people predict, an actual depression. And I hope it doesn't come to that. I know I think there's a few people that strongly disagree with me at my last video talking about this, that I thought it was just going to be a recession or a deeper recession, and they're saying it's going to be a depression. I hope that's not the case. I certainly don't rule it out. I still kind of doubt that will be the case. But I believe that we will have a recession, and this depends on how we do it. There's something else I want to say about the ingenuity of the free market system and about our fellow man, especially here in the United States. We can adapt as humans. That's what we do. We adapt. And I believe that we'll have a new, different normal out of this. And I believe that is what could be save the economy and see areas of stimulus, natural stimulus from the private sector, and that could save us in this particular time, or at least not make it as bad. We'll see how that plays out. I would not rule that out for those of you who do think we are headed for a really deep recession or a depression. Never underestimate. I think that is the fascinating thing about how our economy works and how we can adapt, not only here in the United States, but around the world. So finishing up here, for every coin we make, be it gold or silver, we could probably sell 5 or 6 of them, he said. This is Hayes from the facility. That strong demand will be a little longer lasting, I expect, as people have been quite badly frightened by this whole COVID disaster. That should encourage all of us, folks, that accumulate precious metals. What do people turn to? And yes, notwithstanding, we have seen this before, but when we saw that big sell-off of gold and especially silver, when it went down to $11, $12 an ounce, what happens? Well, the metal moves in another direction, and eventually, through time, it will pick back up again because people want to accumulate it. And what we're seeing here is the prices as of the recording of this video, and you can see the metals are down slightly. But you know what? The actual physical prices are quite up. Now I'm seeing prices upwards of the high $1,800 to $1,900 for gold coins, and silver coins still $21, $22, which are prices that we haven't seen in a while. This paper price action here that we're seeing, especially in silver, yes, that is the spot price for silver. Then you have the futures prices, and you also have what the prices of the bullion dealers are paying and what you are paying for silver right now. And why is that? Because there's strong demand for these metals. But we'll see. We'll see how this all plays out. So there you have it. Very interesting news. Thanks again to Alex Miles for sending this article along to me, and about how they're trying to get these bars to the Comex for the deliveries. It is a mad rush for sure. And this is a reminder to everyone out there. I do post videos on a daily basis. So if you hit that notification bell, which I still encourage you to do, and you don't get a notification, you can always just come back to the channel page, and more than likely you will see a new video there each day. I do want to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.